Scott, I'm really curious as to actually how this is going to work in reality. What does industry need to make this transition happen in the United States? Is it as simple as the Biden administration coming in and providing stability, providing clarity on its vision of how the rules are going to work?
That will undoubtedly help. You're hitting on the most important point that industry always asks of government, which is clear, transparent, long-term policy so that we know what the rules of the game are, and then we can compete our way to try and find the solutions. It's clear that in the past, we've taken different approaches where we prefer certain technologies over others. And in fact, as you probably well know, we've subsidized the fossil fuel industry by more than 6 times more than we've subsidized, renewable power or anything in the climate solution side of the equation for the last several decades. So we're just looking for a level playing field. And it's wonderful that, the administration is looking to establish clear, long-term, transparent rules. But there are other things that we'd like to see. And it's also important to remember that the best 4 years for clean energy are Trump's 4 years. And that highlights just how little sometimes the federal government matters with respect to climate resilient infrastructure and some of what we need to build in order to stave off catastrophic effects of climate change.
Hey, Scott, let's just pretend that D.C. has like $1 billion stimulus for clean tech. That's energy, it's all different kinds of sectors. How much of that stuff is actually manufactured here in the U.S. and how much of it's actually manufactured elsewhere? And how difficult would it be to shift that?
Well, that's an important point, and I know the Obama administration was very focused on bringing manufacturing onshore with a number of the parts of the American Reinvestment and Recovery Act. As you know, that was only $80 or so billion worth of investment from the government, and the Biden plan contemplates a much more significant investment. But I'll also point out that what we're really focused on right now is the deployment of solutions. Back in 2008, we could worry about inventing new solutions to the climate problem. Now, we don't have time to wait for new inventions to come out of MIT's lab. It's about infrastructure, not invention. And the good news is we have proven solutions. We already manufacture a lot of those solutions here onshore. It's also true that places like Germany and China play a pretty significant role, just like they do in any industrial manufacturing industries. But the U.S. has a pretty significant role to play, too. We manufacture solar panels here. We manufacture batteries here. We manufacture wind turbines here. So there's a pretty significant component of the manufacturing base that is here in the U.S. And as you know, there's a big emphasis on enabling the United States vehicle manufacturers to produce clean vehicles here in the United States as well. And that will happen, and that has been happening. So I think a lot of the manufacturing is onshore, and it's not that hard to continue to incentivize more of that.
Do you think, so this is one of the key questions that a lot of governments around the world are asking themselves. If I spend money on this, how am I going to maintain that money within my economy and not let it leak out around the world? And I guess it's a similar story here in Europe as it is in the United States. Should governments mandate that when it spends money, that the manufacturing happens in that country? Is it as simple as that? Is that how the contract should read?
Well, my view is that the government should play a pretty neutral role in terms of the supply side and a more specific role on the demand side. In other words, set the outcome that you want to achieve and let the market sort it out. That's how you reduce the amount that any of this costs to a taxpayer or a government. And in fact, what we know is that most of these investments pay off. These are economic solutions for customers at the end of the day that we're talking about. The reason why clean energy has seen the massive growth over the last decade that it has seen is because it offers a better economic value proposition to the customer than the alternative. And so I don't know that we need to worry so much about incentivizing specific solutions on the supply side, and instead focus on the outcomes that we want to incentivize the market to achieve.
What kind of sector/companies are best positioned to put in the private capital that will be needed?
Well, again, this is an interesting point, too. We talk about $2 trillion in the Biden climate plan. $15 trillion is coming in from the private markets into sustainability over the next decade, according to McKinsey. You've got another set of trillions and trillions of dollars coming into the sector from private actors who are transitioning out of old fossil fuel energy investments into what's called the energy transition area, all of these different areas we're talking about. So the private capital is going to dwarf the government capital that goes into this. And the industries that are going to benefit are renewable energy, power production, obviously. You've got energy efficiency devices. So this is pretty basic stuff like sensors and controls that go into buildings, HVAC, heating, ventilation, and air conditioning systems that are more efficient. Also manufactured all around the world, certainly not as much in the United States in that case. You've got electric vehicle production.
Scott, all of that makes sense, and that's relatively straightforward and feels incremental. Some of the decisions are not incremental. They are great leaps forward, and hydrogen feels like one of those. Where do you stand on those kinds of decisions? Because you could invest billions in hydrogen and find out that it's simply a white elephant.
Yeah, many of us may remember George W. Bush actually in, I think, 2000 campaign ad fueling a GM vehicle with hydrogen. And it has always been right around the corner. And certainly the fossil fuel industry is very excited about the potential for hydrogen because it represents a transition of their fossil fuel fleet more than perhaps, wholesale change into the electricity sector, which many of them are also trying to embrace in order to save themselves. Hydrogen is something that's actually quite real. We are one of the largest owners of hydrogen-powered vehicles. It's not a vehicle that you or I would drive, but it's forklifts. And these forklifts have been sitting in Walmart and Amazon and U.S. Postal Service distribution centers for many years, driving an economic benefit to the customer that is the reason why it's been adopted. So it's not that far off in terms of an industry that is available to be deployed today as a solution. It's actually here. And it's important not to paint with such a broad brush. We actually know certain segments where the economics are just too compelling to do anything else. And it's a segment by segment or customer by customer situation. And hydrogen is a solution for sure for many customers today already.